What's up everyone, it's Caddy with Money Investing. In this video, we are going to be talking about one of my favorite and in my opinion, the highest quality biotech stock that is going to be reporting earnings next week. So I'm going to break down everything you need to know about this company from an intrinsic value standpoint. So we're going to calculate the intrinsic value for this business. We're going to talk about the revenues, the earnings, the cash flows, and my story really with this company that we've been covering for almost 2 years now. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and including all the private live streams. So everything's going to be included. There is a 16% annual discount that does expire and end at the end of this month. So there's only 2 more days left if you want to take advantage of that. So the company that we are talking about today is going to be none other than Vertex Pharmaceutical. It is, in my opinion, arguably one of the highest quality biotech companies out there, based out of Massachusetts. It's trading at an all-time high at $340.73. I first started covering Vertex and doing analysis on this company almost 2 years ago, back in September and July of 2021. So these are videos that I did back then, talking about Vertex Pharmaceutical. So the title of that video was, is Vertex Pharmaceutical stock a buy at $195? Yes, it was trading at $195 at the time. Talking about how it's undervalued, plus it was a growth stock because not only was it trading at a lower multiple, but at the same time had a lot of opportunities and potential for growth in its business. So it is a cystic fibrosis company. That's what it treats in the biotech sector. And its drug Trikafta is, sold worldwide and brings in billions of dollars worth of revenues, positive cash flows. We got excellent balance sheet. You've got a great management team, and you've got very nice, consistently growing revenues and profits. So everything kind of met those check marks. And that was one of the reasons why we ended up taking a position in the first place. And I'm not holding on to Vertex anymore. So it's not part of my personal portfolio. And I'll go over the reasons as to why that is the case. But this right here, again, was a video when we were talking about it back when it was at $188 per share. Did a couple of follow-up videos when it was trading at around $202. Again, is still an undervalued stock at that time, in my opinion. And from those levels, of course, we've seen Vertex rally from that low close to about 96%, right? So it's almost doubled in price in the last almost couple years, so 2 years, since October of 21 to where we are right now. It has gone up really well. In fact, Vertex was one of the stocks that actually ended up saving me in 2022 because I was so tech heavy, and the fact that S&P 500 was selling off in the entirety of 2022. And more specifically, if you take a look at the time frame, S&P started selling off in January, more like December of 21. It started selling off, entered a bear market, and so did the NASDAQ. Very similar price action. They both started selling off. So you can see the NASDAQ really began its selling in November of 21, dropped about 37%. Vertex had different plans, and in fact, it actually ended up going up. Huge outperformance in 2022 from Vertex Pharmaceutical. And like I said, almost doubled in price since our coverage began. So I wanted to go over, why did I actually end up exiting out of that position? There's a very specific reason for it. I'll break that down, and of course do an analysis on this company in more detail, because they are going to be reporting earnings on Monday, May 1st. So they are reporting for the first quarter 2023. So again, hope you guys enjoyed this, and we're going to be talking about a lot of things in this video. So make sure that you drop a like and, of course, subscribe if you haven't already. So talking a little bit about the revenues first, very nice consistent growth, as you can see, that's maintained for the company from about $1.1 billion to over $8.9 billion. So very nice consistent growth. Gross profits also growing from $199 million to over $5.3 billion. So huge amount of margins getting expanded for the company. And operating income, more recently, though, it's gone from like $400 million to over $4.3 billion. So more recently, they've been able to expand operating income by about 10x for the business. Now, this right here is the net income. So again, you can see that more recently they've gone from about $2 billion, $1.1 billion to over $3.3 billion. It's been a little bit more stagnant. It's been more sort of sideways, I would say, not as clean and as consistent as gross profit or revenue, but it's been profitable, right? It's been very good, and diluted share count has been pretty stagnant at around 260 million shares outstanding as well, with EBITDA also growing. And this right here is the earnings forecast, which we'll come back to. But this right here are the margins for the business. And as you can see, the very strong margins for the company at over 60%, 49%, 50%, and it's been a high margin business to begin with. This right here is the balance sheet. So again, sitting on over $10.7 billion worth of cash, and debt sitting at just under 900 million. So we got a negative net debt of over 9.8 billion, with a current and quick ratio at over 4.4, 4.8, and debt to free cash flow at 1.28. So really low debt to free cash flow, significantly higher cash than the debt, and probably even all liabilities combined. And current ratio and quick ratio is over 4. So excellent. Like, this is literally the definition of an A+ balance sheet. This right here is the valuation. And again, if you go back and watch that video from about almost 2 years ago, the valuation at the time was at 14, 15 times, right? It was much lower than where it's trading at the moment, roughly at 26 times earnings at the moment. Price to sales right now is a little bit over 9. We got enterprise value to EBITDA at over 17 to 15, and price to cash flow also at over 21 to 22. So this is significantly higher than where it was obviously almost 2 years ago. And the low valuation with the dislocation in the market with respect to its multiple that it was trading at 2 years ago, and the fact that it was down almost 40% of the time, and the growth opportunities is what really interested me in the stock to begin with. But now I feel like the tides have turned. We are seeing multiples expand again, and so much so that it's actually trading at a multiple that can be considered as a bit too rich for its growth rate. We'll dive into that later in the video. This right here is free cash flow, 66 million, growing to over $3.3 billion for the company. And these are the expectations from Vertex going into Monday, May 1st is when they are reporting numbers. $3.02 is going to be that EPS estimate, with revenue at over $2.3 billion for the company. Now, this right here is one of the reasons as to why I ended up exiting out of my position. And this is a very nice quote. By the way, I just ended this book, Capital Allocators, just finished reading it today. And this is a quote towards the end of the book from Richard Lawrence, who again is a chief investment officer. And the main focus there is to hire or basically allocate funds, right? Allocate capital that is being brought up from all these institutions, trustees and endowment funds, and they're really looking for managers, money managers, hedge fund managers, to manage all that capital, right? Because all these endowment fund institutions, they have a lot of capital needs, liquidity needs on an every year basis. So that's really the premise of the book. But this is a very nice quote from Richard Lawrence that he pretty much mentioned that deciding when to sell is one of the unheralded challenges of our business. Selling is absolutely essential when, number one, you realize you've made a mistake, right? So in this example, it wasn't a mistake, right? So we made that investment, understanding that the market's kind of underpricing or undervaluing Vertex Pharmaceutical. But the number two was the main reason why I ended up exiting out of my position with Vertex. Number two, you're offered tomorrow's price today, right? That one-liner has so much meaning because you are getting tomorrow's price today. What does that mean? That simply means the stock price has moved up so much so fast that you are getting the valuation that you expected to get, let's say 2 years, 3 years down the road, and you're getting that today, right? I think I can make the same case for Nvidia right now. I can make the same case for maybe a couple other stocks, even Microsoft. I could put that in that same bucket because a lot of these companies are built on that hype around AI, and you're really getting tomorrow's price today. So buying at these prices, unfortunately, is not the best risk reward trade-off. So that was the main reason behind that, because if you go back and watch that video, I put together a price target on Vertex at the time of close to $400 per share. Now, did I sell myself a little bit short here? Maybe I did, right? Because nobody can really time the top or the bottom. So yes, I could have exited with a little bit more profit, but this right here was the main reason as to why I exited in the first place with some hefty profits, because Vertex had already moved up almost 90%, 85 to 90% now from its lows from back in November of 21. The third reason, you were rebalancing the portfolio. Fourth, you have more ideas than space in the portfolio. And number five, you realize a company's prospects are changing. So I guess you can put a little bit on the number five as well, because the valuation was definitely changing quite a bit for that business. So coming back to the earnings expectations. So if you move over to our spreadsheet for Vertex Pharmaceutical, net income in 2022, 3.2 billion, share count 259 million, and the growth rate that's expected based on the analyst estimates over here from $14.42 to $21, that's an 8% growth for the future, right? We're talking the next 5 years, 8.3% compounded annual growth, and we're looking at 6.2% compounded annual growth over the next 9 years. So when we plug in these numbers, and I'm going to be generous here with Vertex because I like this company and I want them to be more successful than what the analysts believe it to be. I'm going to go with, let's say, 10% growth rate for Vertex, right? I'm going to go with not 10 or 15 times multiple. Again, being a little bit more generous here, going to go with 20 times PE multiple. The discount rate is going to stay put at 12%. We got 10% margin of safety, and we got a share buyback of, let's just say, minus 0.5%. We end up with a fair value of close to $209 per share. That's the fair value today based on the forecasted growth for the company. And the fact that it's already trading at $340, we're already trading at a price, tomorrow's price, tomorrow in this case being closer to 2025, 2026 prices today. So that's the idea that I wanted to get across, and that's really important lesson in terms of valuation as well. Now, can Vertex go higher? Absolutely. I mean, 2027, I've got a price target of 410. So it can easily rally another 10, 20, 30%, and get past $400. Is that going to make me look like a fool? Maybe, right? But the real idea, the real analysis is really going to be all about valuations, right? Does it make sense to be a buyer of a stock today based on the forecasted earnings growth, based on the future cash flows and earnings? Does it make sense, right, today? That's the real question. And for Vertex Pharmaceutical, unfortunately, as great of a company as it is, unfortunately, it doesn't. Not at this time. So $209 is going to be that fair value. And this is me being generous, right? I'm giving a 20 times P multiple and a 10% growth rate, which is higher than what the analysts expected to be. So $209 is going to be that fair value, which obviously is going to bring us back to those levels from back in October, November, from around those times. So that's going to be the analysis, fundamentally speaking, on Vertex. But technically, of course, it's got very, very nice momentum. It's trading at an all-time high, so it's going to be in a bit of a price discovery here at the moment because we're trading at all-time highs. So we don't know where the buyers and sellers are going to pin down that next resistance for this company right now. But RSI is approaching a little bit on the overbought side here. MACD is also a little bit higher. So I'm going to definitely be paying attention to what type of numbers they report. And of course, wouldn't be surprised if I do end up taking, let's say, a quick technical trade. So this doesn't mean that I'm, not going to take any technical trades on it. If it ends up coming down to 282, it's going to make for a nice potential long swing trade idea on Vertex once again. So this is the entire analysis. Let me know your thoughts down in the comment section below. Congratulations if you're still holding on to Vertex from 2 years ago. That's gonna be great. So congratulations to you if you're still in profit with this company. But hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. And that 60% annual discount is also going to be available down in the description below as well. So as always, happy investing. I'll see you all in the next video.